Hi everyone. Today we're going to cover net worth. This is a calculator that gives you the snapshot of each year and what your net worth is in regard to assets versus liability. And we have made it very comprehensive so you can have a full picture. Now, on our Click Me First, of course, we have our question, we have what we need prior to starting, some tips, and a bit of a longer glossary, which will help if any terminology or something isn't clear, as the definition between asset and liability sometimes overlaps each other. So we're going to do an example like this, but here. All right, so let's start here. There we go. So in 2023, or we can do 2024. There we go. We have a checking account, we have 5,000 euros. In actually 2023 makes more sense. So we can add another year. And in 2024, now we got that good bonus. We have 75,000. In our savings, we have 2,000 here, 2,500 here. Because we're good savers, we have money market account that has 5,000 or sorry, 5,000 and 4,500 here, and so on. So here we're gonna put all the assets. We have cash, emergency fund, life insurance, at its current cash value. If we have a better half that would take it. Now here we're going to put our stocks. So our stocks, what we look at is at the end of the year. Let's say we have a stock that has fluctuated during the year, but at the December 31st of 2023 closed at 100 bucks, and we have 100 of them. That's 10,000 bucks. Doesn't matter how much it's worth now. What matters is what is worth at the time we're accounting closing the year. Just makes things easier. So, and let's say we're 2025, but they increased really well. So now they're same amount of stocks are 15 grand. So we have some bonds, 5,000. They increase it to 5,500. Not a great increase, but still an increase. Now, for real estate, the real estate category, we have the whole market value. So let's say we have a market that is just so it's easier to visualize, we're going to say 100 grand. So we have that apartment that we can sell it today for 100 grand, but we also have a mortgage that is owed on it that is 80. So essentially our net worth from this is only 20k if we sell it today. So here comes year number two, where market value prices increase. So great, it jumped 10%. Awesome. Now we've already paid more of our debt, so we have 75 left. Perfect. Um, if we have a vehicle, again, we look at its market value today. If we can sell it for 5,000 euros, we put 5,000. Next year is a year older, maybe we can sell it for only 45. Our we put 45. If we have any collectibles, let's say we have the Mona Lisa, we can put a couple of millions here. Or if we don't, just put anything that is over 500 bucks. This is like a rule of thumb. But you can put, of course, anything you want. So any retirement accounts you have, 401ks for the American customers or an IRA, any account that has value and can be liquidated today, we'll put it here. So let's say I have an insurance that I can cash out at any time I want, and it's 5,000. Here, because I pay more, it's 5,500. Now, if we have um, a pension, let's say we start getting uh, 500 euros every month cash. We cannot account for it until we reach the moment that can be after 20 years. So here we just put items in the asset section. We only put items that we can currently liquefy and are worth something today. Something that we can take after 5 years, we're not going to put it in this year. And of course, other assets. So we do the same thing for liabilities here. Let's say we have a student loan of, if you live in the States, a lot, if you live in the Europe, much less, but let's say 10,000 euros. We pay off a little bit, 85, and so on. So slowly but surely, we can see how our net worth is jumping higher and higher. And we can see that actually our liabilities are shrinking, which makes our effective net worth much higher. And when we have data, when we fill the whole thing, like we can actually take this one as an example, we can see that we can see what brings our net worth up. For example, this guy started 2023 with still a lot, but he ended with millions. Beautiful. I wish this to all of you. Now, liabilities, they also increase, but they don't increase with the same speed. And we look at the bottom graph, we can see that the ratio between asset and liability continues to drop with respect to the asset. So the higher this is, the better the efficiency of asset to liability ratio. Um, Perfect. That was the net worth. Thank you and be healthy.